I think clearly today investors are cheering, I guess, some good prospects for maybe some resolution on trade, and of course, Turkey's getting a little bit of a bounce. You see who's swimming naked when the tide goes out, and those countries and companies that are ill-positioned, get exposed. And I think that's kind of what happened in Turkey. The way we invest at Alger is to kind of look for quality companies who are gaining market share with strong balance sheets and going to succeed in any kind of environment.
But are you always fully invested in stocks? Steve sets it up. We've gone through major easing, and now we're moving to a world of tightening, right? If you believe that to any degree the reason we've had a big rally in stocks is because of easing, when the world starts to tighten, do you say maybe we should have a little less exposure to stocks?
Well, we don't change our exposure to equities in general. Our mandate is to stay fully invested. I mean, at Alger, if you look at our philosophy, it's to invest in innovation and change. And kind of the analogy I like to use is a powerboat versus a sailboat. We're looking for a company that has an engine of growth that's going to propel it through the economic seas, however they might be. And we tend to avoid the companies that are more cyclical, value in nature, more like a sailboat, dependent on the economic winds, and that can be a great ride if the wind's blowing the right way. But we like to stick with our horses like e-commerce, internet advertising, cloud computing, those kinds of engines.
Rich, do you want to stick with technology? I mean, when I take a look at the market bounce in today's session, for instance, tech is actually one of the lagging sectors when it comes to the sectors that are higher on the session compared to yesterday's big losses. And are we going to look back and say, there had been a period of rotation that started during this market tumult that is going to persist through the end of the year?
Yeah, I don't think there's any question we're going to be looking at some sector rotation coming along here in the near future. As we all know, this bull market's been very concentrated in the U.S. in certain growth sectors, tech and healthcare, of course, consumer discretionary to some extent. But as the economy winds through the cycle, as interest rates continue to eke up higher, inflation maybe rears its ugly head, we'll eventually see a turn to the later cycle sectors, some of which we in fact saw today, consumer staples, for example, the more defensive sectors. And that's going to be the play, I think, for the next few months out.